Oil is jumping before the opening bell, and Wall Street is not treating it like a normal commodity move. Futures are under pressure, tech is already fragile, and Bitcoin is slipping back into the same risk-off current. The thesis is simple. This is not just an oil headline, it is a liquidity warning. When energy prices jump, the market immediately starts asking whether inflation pressure, yields, and Fed risk are coming back into the room. The trigger is renewed tension around the US and Iran, with the Strait of Hormuz back in focus and crude prices moving sharply higher. That matters because oil is not just another chart on the screen. It sits inside inflation expectations, consumer pressure, corporate margins, and central bank psychology. For a US investor waking up before the market opens, the question is not only whether stocks are red. The real question is whether yesterday's risk appetite still has enough liquidity behind it. This is where Wall Street psychology gets interesting. The AI trade was already showing stress, with semiconductor names losing momentum after a massive run and expectations getting harder to beat. When a market is heavily positioned in one winning narrative, it does not always need a perfect reason to de-risk. Sometimes it only needs a new macro shock that reminds investors the environment is not as clean as the price action made it look. Bitcoin adds another layer to the story because it is not behaving like a pure safe haven here. It is trading more like a liquidity-sensitive risk asset, moving with the same pressure hitting Nasdaq and speculative positioning. That does not mean Bitcoin's long-term story is broken, and it does not mean stocks have to collapse. It means the market is separating belief from flow, and flow is what moves prices when fear returns. So the takeaway is calm but important. Do not watch oil by itself, and do not watch futures by themselves. Watch whether oil stays elevated, whether yields keep pressing higher, and whether tech buyers step back in after the open. At the calm metrics, this is the point. Price is the surface, but liquidity is the message. And this morning, the message is that risk appetite is being tested before Wall Street even starts trading.